Hello traders, you're welcome to my new video, daily bias, some tutorials on it. Like we have on the screen, we want to predict the next daily candle. It's most likely going to be bearish. We are looking at this portion. What's the next daily candle going to be like? Reasons being that, one, we are in a bearish order flow when we are having bearish break of structure, and if you consider this impulsive leg, at least price is reversing from premium. Okay, and also we are looking to take out the sell side liquidity resting below the swing low. Okay, so with that said, let's look out for the outcome in the next slide, which is this candle. Notice that it was not actually a down close candle. Notice also we are yet to take out the lows. So even though we have identified this as our target, it is not a must that the next or the second candle or even the third will take out this low. But based on the premise of taking a trade, was our prediction wrong? Even though we are not having a bullish candle, bullish close candle? Not at all. Because in trading based on your bias, the close of the candle does not matter much as the open, the high, or even the low. What is important is that price trades below the low of the previous day. So you are supposed to take either whole profit or partial profit when price gets to that point. Notice also how price readed the high of the previous day here. Okay, and this gives us a larger distribution range downwards, in other words, more profit. So with that said, let's switch to the 5 minutes time frame for a closer look. On the 5 minutes time frame, we identified this drop on liquidity, this sell side liquidity, this buy side liquidity in the form of equal highs. Okay, and we can see that Monday's price action is actually bearish. Now for us not to get too confused, this is Monday, this is Tuesday, and this is what? Wednesday. Okay, so you can see that Monday's price action was actually bearish. We started seeing retracement into Tuesday and potentially impulsed downwards, but this move actually failed to take out Monday's low. It becomes logical for us to see price trading beyond this Tuesday's high. On Wednesday, that was achieved. Price traded above Tuesday's high, but failed to take out this buy side liquidity that we identified. This situation suggests to us that there is going to be an upward thrust shortly, and that is what happened. Just to note, the draw on liquidity was the purpose for this uptrend. Okay, because price wants to clear the liquidity existing above these equal highs was simply the purpose for this uptrend. And don't forget, remember that we are focusing, like I was saying, remember that we are focusing on Wednesday's price action. So we are going to zoom in to see whatever we actually have here. All right, we're going to zoom in to see whatever we actually have here. I'm sorry for the distraction, for the background noise. All right, So before then, after the manipulation of this liquidity resting above the buy side, our target is going to be the previous day low, which is actually Tuesday, or even the low of the day before, because as you can see, they form an approximately equal lows. So it is quite reasonable for us to actually take this as well as our targets. Notice also that we are not interested in the close of the day, which is actually here. Otherwise you will get out here, and I hope you will like it. Alright, so let's zoom in to see exactly what this place, how to enter, just to give you another concept of how to enter. So you can see this is the London kill zone and the New York kill zone, okay, and this is the Asian high, and this is that Tuesday high. Price actually traded on Wednesday above the Tuesday's high, and you can see most people actually caught this very nice trade, but if you are not careful, price will end up taking you out. So this is kind of a big trap to go short. If you lost, it's fine. If you lost, please remain focused. Don't lose focus if you lose, okay? Just remain focused, and you will see that price eventually decided now to take this buy side liquidity. And when it does, you see, how do we know? First of all, a good sign that price is taking this buy side liquidity. After trading above this buy side liquidity, price traded below it, okay, created this short-term swing low, and price could not create a higher high, and instead we have a shift in market structure by the break of this short-term swing high. If you have this break of structure, you will now notice also that we have imbalance that is here, fair value gap, okay? You have imbalance, and you can just set your limits and you can trade from here, which is going to be a very good trade. Not everybody will be comfortable really to take this trade, reason being they have not taken these lows, but that is left for you to back test to see how many times price can actually do this even without taking this low, this swing that led to the manipulation of this buy side liquidity. So in other words, you can wait to see this low being taken out. When the low was taken out, you are lucky to have another opportunity. You can trade from there, and that's what we have here. You can either trade from here or trade from there, okay? So sometimes you may not have this opportunity while waiting for this low to be broken. It's all fine. Okay, let's see what we had at the end of the day. So we have this very nice move, and you can see after price cleared this liquidity below, got to our target, you can actually see what happened. So it's just, the main concept here is when you are trading, you have to draw your story from like you see me drawing story from what happened on Monday, what happened on Tuesday. Is really going to help you a lot, and focus on these areas of where the market is much more active. So that's all I really have to say about the entry. Maybe next time we can talk more about the entry. These are all ICT concepts. Credit to him, just trying to make it in another the way I understand it, presenting it to you to show you that it works. You can try to backtest many of his concepts as well. So with that, thank you for your time, and please like and subscribe if you find the concept useful. Thank you.